What's going on, guys? It's your boy Ferris. In today's video I'm going to show you guys a simple cryptocurrency shorting strategy that can be used in numerous cryptocurrencies. It's a strategy I use myself, and obviously you have to take this with a grain of salt. You use this at your own risk. Understand, I'm not a financial advisor. I'm just showing you something that simply has worked in the past and may work again, using technical analysis solely as an indicator to take or make a decision. And investor sentiment, as well as the overall market view of cryptocurrency. I'm not just speculating on the price going up and down based off of belief. I'm using my own judgment, my own research into cryptocurrency and the bad and negative things around it to justify a decision on betting against the cryptocurrency. So I hope that clears things up. I know a lot of people on YouTube tend to just talk and talk and talk and talk about cryptocurrency, and I'm going to clear that up for you guys right here. They're simply doing it for YouTube views, YouTube likes, YouTube ad clicks, so they can make money off you while you lose money. They don't care if their channel grows in the coming years. They just want the money now. So I want to clarify this. This strategy will continue to work until there's a major market shift, till the bull side, which I don't see happening at the time of filming this video. It's May 25th. May 26, 2018. I see this bear market going in for the next few months, so it could be a profitable strategy for you, and it's something I've been mentioning in my live streams. Without further ado, guys, let's get started. But before we do, make sure to like the video if this helps you out. Share the video. Subscribe to the channel. It helps me grow. It helps this message get out there. And please turn on notifications for more helpful videos on cryptocurrency and the stock market, on what I believe to be factual and what I do for my own research. So let's get started here. It's a very simple strategy. As you guys know, in the live streams, you can watch them. They're pre-recorded. We were talking about Bitcoin and cryptocurrency and how they have these pockets. We'll start with Bitcoin. They have these pockets of consolidation. Bitcoin, a little bit more volatile. I like Ethereum because it's a little simpler. It's very simple. I don't like to make it complex, but Bitcoin, all it does is really bear flag. And you could tell the bear flag by, these pockets of consolidation that I'm going to highlight with these triangle box or these rectangle boxes, okay? And we'll highlight them with yellow in the middle. So let's get into that. You can see there's one pocket right there, okay? We'll clone this, okay? And we can see another pocket here. You can see another pocket here. Okay, you see these pockets? You clone it again, there's another pocket here. Now I'm showing you hindsight things so you can kind of get a general understanding of what it leads to. Now what's going on right now? It's creating another pocket of consolidation. I like to call them pockets. You can call them bear flags. They're just pockets of where the price does not move from a range and fails to break out. Now you got to understand, this is not just, oh, okay, the price is here. This is a certain price. You go short at this price. That's not how the game works. If you think like that, you're going to fail. You'll lose your money. You have to think, what is this telling me? This is telling me that people are unwilling to buy the cryptocurrency or the asset at up to a higher price. It's showing a lack of demand, and it's showing a greater supply available at this price than previous. It's a very simple concept. And you have to get the speculation out of you. You have to make decisions. Now, speculation is basically making a decision without all evidence there. You have to find more evidence to justify your decision so you're not purely speculating and gambling. So understand this. You can see this has happened before, okay? The law of averages might allow you to believe that this will happen again. So what do? You take a rational decision and you make a decision using a stop off the highs. You can use this high, or this high. You have 3 different highs to risk off. Understand that the lower the high, the riskier the short's going to be, because it could eventually, you can get squeezed up like this and get a double top, and they'll squeeze you out because, again, what I mentioned here in my live streams, the U.S. is launching a criminal probe into Bitcoin price manipulation dated May 4th, 2018. Again, the date's May 26th, 2018. The Bitcoin price manipulation has been going on for months on end, almost years on end. You have to understand that. Now we look at the greater picture here. This is on the 1 hour, so you can see, these pockets of consolidation are very small, but they can be justified here, okay? And we could clone these, and I could keep doing this over and over and over again, okay? But you can see this, and I'm going to show the point. We have pocket of consolidation here, and you short off the highs. as high as it gets. And usually the highs retrace to former consolidation areas where the box is highlighted. You can see where it consolidated before making another leg down. It comes up and it tests this level. Okay, it does the same thing here, but this time it even shows greater weakness by failing to even get back to the pockets of consolidation here. So as I highlight that, you can see this is a pocket of consolidation right here in this yellow box. It fails to even get there. If you guys can see what I'm trying to say, it's not even failing to hit new highs. It's showing weakness. Now, that's just defined in Bitcoin, because Bitcoin is the overall cryptocurrency market. Regardless of what you want to think, that's just how it is. Now, I use Ethereum because Ethereum is very easy to read for myself. And we'll do the same strategy here. You can see Ethereum, again, has pockets of resistance. This is a form of resistance where the price failed to reach a new high and gets rejected very fast. What you do is you want to try to short here, risking off either if you have a good enough money and a large enough amount of capital to risking off this high that assures you a greater risk management of not losing all your money. Okay, so you short off this high. This would be your stop loss. The high up here near about almost 795, and you risk off. You start shorting here around 770. That's a $20 risk point. You got greater leverage in case the price squeezes up. Now, it's not going to squeeze up there as shown here, but you're making in turn, so that's 20 to 1. You're making $100 plus. You're making nearly $130. So that's more than a 3 to 4 to 1 ratio on your risk to reward. Okay, putting the odds in your favor. Okay, so you guys have to understand this strategy. You don't want to just purely speculate. You want to use data. All this chart is telling you is data of where the price has went, and you're using that data to make up a decision by going through the factual data that's proven, that's already out there and stated about the public, and not listening to the hype from CNBC or all these YouTubers, making rational decisions on what you read in the past, and understanding how bubbles work. Again, we have the same concept here, demonstrated here, and the same concept that's demonstrated here. Again, we could demonstrate that here with this pocket of resistance right here. Okay, and this one leading down to the final crash. Now, this is not the final crash, but that was the big wham, and this is where you could use this strategy to short again. Because what's going on? The same type of thing that was going on here, and this is where I made $6,000 shorting using pyramiding. I could describe that in another video, but to keep this simple, it's just basically pyramiding down. Once the price is falling very quickly, you just start adding a lot of shorts in here. Very risky, but it makes you a lot of money. Regardless, you can see around the same level, you could see this, we're consolidating. Price tends to be elastic. It tends to run back to a certain point, okay? And it gets back to that point and it tries to stick there and hold that, support level. And you could see that happening right here in this general area. You can see highlighted here, the price has definitely came back here in the past, and it's doing it again. Now, what can we assume here? We can assume it's going to fail because it is failing. It failed to hit, break this pocket of resistance here, and we'll make this yellow box smaller. Again, just remember these yellow boxes are trying to highlight key price points to show you guys and prove a point. So you can, again, turn this into a strategy of your own. Okay? So you can see here is the pocket of resistance where the price failed to break out or hold steady, but it showed, where buyers did try to come in right here. It failed to get there 3 times. What can you assume based off probabilities, the law of averages, and the overall environment in cryptocurrency, which obviously this is depicting the environment. The price is probably going to fall down lower. How do you manage your risk? You set a stop loss either off this high or this high right here, and you set a take profit, around the level of support where we expect to hit, which is about $500. Okay, and that is a very, very simple strategy. I hope I did go into this with precision. I hope I went into this very quickly, but I hope this was something you could understand. Okay, this is how you can use price to define. You can use the data and price to give you a better perspective on what the market is expected to do. So you're not making a decision based off pure speculation alone. You're making a decision off data, facts, because all the graph is showing you is factual data in an illustrated form in candles. That's it. It's not hard to understand. And then you make a decision from there on after. You're investing and you're trading, you're not speculating, and you're not gambling. Understand the difference, okay? A lot of these YouTubers will entice you to speculate on prices of Litecoin, Bitcoin, Ethereum, and they want to just make money off the views. So understand that. Again, I hope this strategy helped. If you guys need more videos like this, feel free to let me know. I will go into more depth on this strategy. I still think Bitcoin shorting Ethereum and Bitcoin is very profitable as prices are still very high compared to what they were a year ago. And a few key books you guys should start reading if you want my suggestions is Extraordinary and Popular Delusions in the Madness of Crowds. You can buy this or find this online. The Empire of Business by Andrew Carnegie, the great steel tycoon in the early 19th century. Okay, he wrote this book. It's free. You can find it on Google. It's a free book. Read it. I really do suggest you read this book. And the Random Reminiscence of Men and Events, the autobiography of John D. Rockefeller. And again, another book to read is The Reminiscence of a Stock Operator. Understand a stock operator and what it is. It's a very important thing you need to understand, and how these people used these points and how they used people to make money off them in the stock market in the early 19th century, leading into the 20th century and the 21st century. And these books still prove true because the data and human nature never changes, and we're seeing this happen time and time again. I hope this helps. I know I went pretty quickly. If you guys enjoyed the video, feel free to leave a like, comment telling me what you think. Maybe this helped you make money. If it didn't, feel free to let me know what I could do and improve to become a better YouTuber and provide valuable information from my past experiences to help you or assist you in becoming a better trader and to generate more wealth for you and your family. I hope this was helpful. Again, leave a like, turn on notifications, subscribe to the channel, and I hope you guys have a great Memorial Day weekend. I'll catch you guys in the next video. Peace.